Hi guys, so yeah, today we're going to be talking about the most important setup you can have in Forex. And this setup is called the breaker block pattern, or you can simply use it by just using the market structure. So what is market structure? So I'm going to illustrate from the very basics. We know that if it is a downtrend, the market, so for downtrend, the market has to form what? Lower lows and lower highs, and so it has to be moving like we've got this. So lower low, lower high, lower low, lower high, and then this is what? If you have your moving averages, you see your moving averages. Let me not change color. Your moving averages will be above here if you are an indicators person. And then as for uptrend, so uptrend, forgive me for the handwriting, guys. It has to form what? Higher highs and higher lows. So what are you expecting? You'll be expecting to see something like there is an impulsive moves, retracement, impulsive move, retracement, impulsive moves. This is a higher high, a higher low, higher high, a higher low. Then we've got what? Now reversal, the breaker block pattern now. So from the very basics, we've got a what? Market can be an uptrend or can be a downtrend. And then there is a time at which it has to what? To change from being an uptrend to being a what? To being a downtrend. So from, let me draw, we've got higher high, higher low, higher high, higher low, higher high. Then so this one becomes our what? Our lowest point of the market. The market has to break this structure. So we've got what? BOS. If you look at this, because this is our what? Higher high, higher low here, higher high. We have broke this structure, and then price has to what? Has to come back. So most common people will be using trend lines. You see people drawing trend lines like this, but that's another story to tell another time. So if you want to see where the market will come, so let me do it like this. Right, it has broken this what? Higher low. What you then do, you just wait for price to be above this what? The previous higher. So we're looking at this one, so you just draw a line there, and then price has to what? Come back. It can either come to form a nice head and shoulder around this area, or it can come and retest this order block here. Either way, so we've got, so we can have price coming here, going down. This is what we call the what? The breaker block structure. Or it can come all the way here, do this. Or it can also come from this position, give you 3 levels from the BTMM, and start to come down. Either way, this is a breaker block structure. You'll see that BTMM, ICT, and any other strategy you think of out there, it's just talking about this market structure. Only that you are now using your indicators, you are now using your trend lines, you are now using your resistance, you are now using order blocks. Either way, you are talking the same language. You are just trading the same thing. So, right, let me... And then from here, so we've got, if it breaks here, then starts to form what? New. So now we've moved away. Here it was an uptrend. Then this side is now what? A downtrend. So what are you expecting this time? You've got this. So when most of the time price comes back around this area, the BTMM guys can call it the IT50, or at least the ICT guys will then maybe call it breaker block pattern. Others will call it a return to order block, ROB. Everyone is just trading the same thing, but you should understand that it's all derived from the basics. You should understand the basics. The basics are very important. Keep everything simple so that when you are now seeing these things, it becomes easier. So yes, guys, so I'll just end by giving you an example. So example. Right, looking at our V10, this is the, what was the date again? Yeah, 16th. That is yesterday. Today I'm recording this on the 17th of April. So you can actually see it right there. Of course, we'll talk about how you come to observe these structures, etc. But from the basics, you will be seeing this structure. So what are we seeing there? So if I first draw the structure, I said the market will be forming in the real market, in the real moving market, like if you're looking at indices, Euro USD pairs, the market sometimes will not form clear cut patterns, like forming a higher low, higher what. But as for reversals, the market doesn't change. The market never changes, guys. So you see, we've got this. So here it was our higher high. It came back, broke the structure, and then it broke again this structure, and then it returned. So I said it can either come back to this zone, or it can come back to this order block. Either way, everyone will be just doing trading the same thing, only that you don't know it yet. Of course, here you can see that it formed a nice MPO bounce. That is a nice MPO bounce. So yeah, everyone is just trading the same thing, only that you don't know it yet. But for this V10, we've got higher high, higher low, higher high, breaking market structure, return to order block. The price went down. So this is just an example, guys. All right, let me give you another example. So it depends on which time frame. So all this, you can actually anticipate these things depending on whether you've done a good multi-frame. If you are using a multi-frame strategy where you look at different time frames, multiple time frame strategy where you look at different time frames for you to make a decision on when to enter a trade. So it always comes back to these guys. Let me look for another example. Right, here we've got V10 1S. So I'll focus on this. So right, let me go to a smaller time frame. Right, a smaller time frame will look like this. So like I said, guys, the market will always move the same way, only that sometimes you need eyes which can see that the pattern which is forming is this one, the pattern which is forming is that one, the pattern. But know that the market always move. When it's changing from being an uptrend to being a downtrend, it always form either a nice breakup block pattern. So you need to know about the breakup block pattern, guys, because it's very important. It is just, so what is it? A breakup block pattern, it is that phase whereby the market changes from being an uptrend to being a downtrend, or from being a downtrend to being an uptrend. The pattern which you see there, that pattern is always consistent. It will never change. It will always come, whether you are looking at synthetic indices, whether you are looking at currencies, whether you are looking at whatever, but the pattern will always be the same. So let me talk about this V101S. So we've got what? For this one, it was a buy. So we're looking at a breakup block pattern for buys. So lower low, lower high, lower low, breaking market structure. So I said it can either return to this level, or it can what? Come to this level. Either way, you have to have eyes which can see, guys. So coming on to this example, we've got a lower low, lower high, lower low, break in market structure, return. If you draw here, you see your spikes coming there. You see these spikes, and then the price went up. So you should have eyes which can see. Of course, we'll talk about when you should look for these things. Sometimes you just need an indicator which can simply tell you that you are now oversold, overbought. It's really simple, guys. I don't know why people complicate things. So yeah, I think for today, yeah, you can just subscribe, guys. You can just subscribe. These things are easy and straightforward. You can just subscribe. But this pattern, they will never, ever change. You're just trading. Just know that the difference between you and your gurus out there, which you see on YouTube being flexing and everything, it's just that you don't see these patterns. You don't see these patterns. So yeah, thank you, guys. Thank you. You have a nice day. Please subscribe, share, like, comment. Thank you.